markets currently EJ. Now, if you guys notice, I've been dropping a lot of analysis on EJ mainly because with GU, especially with the government shutdown, GU has been choppy. Okay, let's take a look at that before we continue. So, the moves on GU really are not as refined, okay, as they used to be following the shutdown. But focusing on Eurjpy has given us a lot of opportunities, and yeah. Now coming to this new week on EJ, we can see how last week closed. Guys, I there's a video I posted where I said I'll be using strictly black candles from now. Okay, so you guys can see the market clearly as opposed to the color distraction that the market gives or the market distracts us with. So coming to a new trading week here, you can see how last week closed. We came sold off into 177,500. Last week we pushed, okay, into 178,750, but we've managed to close back at 177,500. Now, in my opinion, this market is still very, very much bearish. Okay, especially as you can see, the market flow. If I were to zoom out, we see we are below the moving average, which basically means we're in sell type market. Okay, so going to the daily now, we can see that from the daily last week, I caught a sell from this high after seeing the excuse me after seeing the daily bearish candle close below the lows of the last bullish candle here. It was a telltale sign that market was going to sell off, which I caught an entry from 176,250 and I took profit at 178,750, which is basically somewhere around here, 253 pips, good win. But then after taking profit here, I was more or less still looking to sell because as you can see, everything is pushing to the downside. Even on the daily time frame, we are below the moving average, which is clear selling territory. So as you can see, last week we saw buyers push price above the high of the last bearish candle here. Boom. Now with this at an area of 177,500, it could have tricked us into going long because the this was kind of like a signal. So you can say 1, 2, 3 at a key level. Most people will take this buy, but I didn't take the buy because of confluences I saw on the lower time frames, i.e., 4 hourly and 1 hourly. But eventually, um, on Thursday last week, we saw this big bearish closure below 1775, below the lows of the last bearish candle. So what I'm looking at for now is price reaching back into 177,500. As you can see, we've reached back there into 1775 on Friday. We reached back there on Friday last week, which was here. We're seeing price did not gap, which is kind of a good thing. So we're seeing how price reached back into 177,500 right now on the 4 hour time frame. You can see the reason why I did not go long last week after seeing that trade above 175 was because the moving average on the 4 hour was still very much. You can see we reached into the moving average and then sold off, which we've come back into the moving average for a lower high type move. Now, what tell people in my community is that when you see price making this form of support on the 4 hourly, you always want to wait for a break of support on the 4 hourly as well. So basically, we could see EJ trade back into the moving average area or maybe this zone. It's currently we're at 61.8 area here on Fibonacci. So we could see price reach back into this zone and then look for sell off. Let's see how this plays out. And right now, I can't see any trend line area of support except this one. Okay, let me just reduce the thickness of that one. So as you can see, we have 4 hour structural area of support that We want to see price trade below. If we trade below this region on the 1 hour time frame, this one on testament, but we have to see price trade below the structural area of the 4 hour time frame before we be looking to go long. But right now, since it's Monday, London session on Monday, and we just came to a new month, we'll have to give the market time a few hours to find its feet, then see how it goes. Have a good trading day, guys. I'll keep you guys updated.